You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer.
Hi there, it's Victor here once again from foreshoremarkets.com. In today's video, I will be introducing you to chart patterns. Okay, so specifically today we are going to be treating double tops and double bottoms, but I want you to know that what we have started treating now is chart patterns. Okay, remember I gave you an overview of the whole of technical analysis at the beginning, and so we are going into them, one by one, class by class, and treating them. So today we'll be looking at the concept of double tops and double bottoms and how you use them, to place your trades in the market. All right. So double bottoms. So this is what your typical double bottom looks like. Okay. A double bottom simply means that you have support, right? And then price goes up and then comes back down and tests the previous support. So price comes back to the previous support zone, which is here. You draw that line and extend it to the right. So it's price comes close around the support line there and forms another support. So forming a second support confirms this place as a support and confirms the line you draw there as a good support zone. Okay, and then how do you trade your double bottoms? One of the key content or key triggers of trading the double bottom pattern is the neckline. Okay, every double bottom pattern, the first thing you need to look for after you establish your two supports is the neckline. Okay, so the neckline is usually the center of the center peak or in between the two support zones. Okay, so you draw a horizontal line across that neckline. This is slanted to the side. Okay, we draw it like a trend line, but ideally it's supposed to be horizontal, and I will show you how. And so you place, so let's say you extend this neckline to the side here, and then you make sure that you place your buy trade once the price goes above the neckline. Don't worry, I'm going to show you practical examples. That is for double top, double bottom. So the double top chart pattern is exactly the opposite of the double bottom. So it means you have price went up and did a first top, which is a first resistance, came back, okay, did a support here, and then went back up to test the previous resistance, okay, there, right? Confirm that place as a resistance by coming down, and then you as an experienced analyst, you need to draw your resistance line above there, okay? And then the first thing you look out for is the neckline, the center support between the two double tops is where you draw the neckline, horizontal line across there to the right, to intersect with the price action or with the chart. Okay, and so once the price comes down and goes below the support line here, you place your sell. Okay, put your stop loss above the resistance, and it is expected that once the price goes below the neckline, it usually goes a very far distance down. Okay, so I think I need to invoke the third principle of technical analysis here. Before we go further in chart patterns, understand that history tends to repeat itself. Okay, so why are these patterns very, very popular? Because it has been established that history repeats itself when you see these patterns happen in the market. Most times history tends to repeat itself. And what is that history? The fact that when a double top forms and price breaks the neckline here, okay, the move down is usually very, very huge. Okay, same thing with double bottom. When price forms two bottoms, a double bottom, and price goes up above the neckline, the price usually does a very big move to the upside. Okay, history, that is simply what it means by history repeats itself. So every time you see a double bottom, you're right, your mind should be telling you possible reversal, a possible buy trade. And every time you see a double top, your mind should quickly go to the fact that it is a possible excuse me, it is a possible sell trade. Okay, let's go into some practical examples on the real chart. So I'll first of all draw it here. So your classic double bottom looks like this. One, support, goes up, goes up, goes up. So this is support, support. So this is bottom, bottom one, bottom two. You draw your support line across there, which is a simple trend line. Okay, now this is resistance. Okay, this is the resistance in between your two supports. So that is where you draw the neckline, a straight line, and extend it to the right. Okay, whenever price, so this price can come like this, it can come up like this, it can come up like this. Let's make it a full line. So basically, once a support forms, and let's say price is around this level, okay, you just extend it to the side like that. Now what you should have immediately done, so the second support is establishing, the second bottom is establishing. What you should have immediately done is just draw the neckline and extend it to the right and wait. Wherever this line, this price coming up, so from here also understand that it can go down and fail. Okay, and so once it fails, your buy trade here will not be activated. Okay, so that double top pattern, bottom pattern failed. Okay, and so you know that, okay, the reversal has failed, and you wait for a new one. Okay, so now let's assume that this is the one that happened and it goes here. The moment price goes above here, above that neckline, you buy. Okay, you put your stop loss below there, below the support, below, at least reasonably. Don't just put your stop loss immediately under the support, because that is where the big boys usually try to manipulate the market and make sure you hit your stop loss. So give it enough space below there, reasonable space, and then put your stop loss. Okay, put your stop loss there. But in the case of head and in the case of double top and double bottom, this is where you put your stop loss, exactly below the support. So let's leave it like that. Okay, then you can put your take profit somewhere up there. Make it like 2 times. Example, make your take profit equals to stop loss 2 times of your stop loss. So if you lose, maybe you lose 20 pips. If you win, you win 40 pips. Okay, so your entry price is here, entry, your stop loss is here, your take profit is here. Okay, remember, for you to calculate your stop loss, it is the difference in price. So you calculate your pips, subtract the price here, and subtract this price from this price, you get your number of pips. For your take profit, you subtract the price here, this is for your profit. You subtract this price and subtract this price from this price, you get your number of pips. in take profit. Okay, so that is your double top and double bottom. That's a double bottom. Let's quickly do the double top. Okay, so you draw your, so this is resistance 1, resistance 2. Note that resistance 1 and resistance 2 will not be exactly on the same line but they'll be around the same area. So this is the support. Draw the neckline. Okay, so you sell once price goes below the neckline. Your stop loss is above the previous resistance, and your take profit is 2 times of your stop loss. So you can make that 3 times or 4 times. You can even make it 4 times. It all depends on your own trading strategy. Okay, so this is a double top chart pattern, and this is a double bottom chart pattern, and that is exactly how you use them to place trades in the market. Now invoke the principle of history always repeats itself. Every time you see a double top or a double bottom, you know it is an opportunity to make money. Okay, let's look at it, and let's look at a typical example on the chart. Let's look for a double bottom. Let me start from euro dollar. Double bottom, double top. I don't see anyone there. Nothing here. Nothing here. Let's see. I need a double top. Double bottom. Let's see. NZD USD. So this is, we are carrying out, this is how you do your technical analysis basically. Okay, you scan through your charts and you're looking for double tops and double bottom. This looks like one, but it's not good enough for me. So let's look for another chart, AUD USD. We are looking for double bottoms, and of course if you are a double bottom double top trader, whenever you don't see your double top or your double bottom, you don't trade. You just have to wait. Awesome. You just have to wait until you see what you're looking for. So this is a good example of a double top that is playing out right now. Okay, so we have resistance 1 here, we have a resistance 2 here. Okay, remember I said it is not going to look picture perfect. Okay, it's not going to look picture perfect. Doesn't mean that this one must stop here and come down. So it can pierce above there. So this is just trying to fool the buyers or the bulls in the market, and so some bulls guys will buy here, and then the big boys will reverse the market, you know. So remember I said you always have to think like the big boys. Always try to put yourself in their mind. What are they trying to do? Okay, so that move up there failed. Resistance formed there. Okay, and so it means that this support, this resistance here, the first one, held, and this was validated as a resistance zone, and then price starts coming down. Where is your neckline? Your neckline is the support in between the 2 resistances. Okay, so this is a good one. Okay, and then you sell the moment price goes below this trend line. So you can either sell immediately price goes below, or you wait for the candle to close below. Example, some people use 4-hour candle, some people use 1-hour candle. Wait for the candle to close, but preferably 4 hours to close below there. So this one closed below, then immediately on the next candle you sell. Okay, your stop loss is above the previous resistance, so above here. Okay, let me put that line for you. Stop loss is above the previous resistance, so that's your stop loss. This is your entry, and then you calculate the distance in pips between here, the neckline, and the stop loss, and then make your take profit minimum of 2 times of your stop loss. It's as simple as ABC. Let's see if I can find another one. Let's leave the cards, let's leave the AUDs, see if I can find another one. So double tops and double bottoms usually occur at the ends of trend, after a trend. Okay, Double tops and double bottom usually occur at the end of trends. Okay, let's see. Oh, awesome. No, that's not good enough. So we're looking for a price that has gone far. Let me take this back. No. Okay, this looks like a good one. This looks like a good one. Okay, so remember, your double top should form after a big uptrend. Okay, so double top simply tell you that the market is trying to do a major reversal, while double bottoms is telling you that the market is trying to do a major reversal after a downtrend. Let me take it again. Double bottom is most effective after a downtrend, and so it helps you predict a reversal of the downtrend, while double top, when it happens after an uptrend, it helps you to pick out the reversal of an uptrend. So you won't just look for double tops anyhow. You have to wait for a big move. So look at this one, for example. From here, the price went up, so it did a big up move. Okay, so you now use the double top to predict or analyze when that big up move is going to reverse. So let's draw the line there. Draw the line. So this is a good resistance line. Okay, so you can see first top here. Okay, second top. All of these are tops. Okay, so you can see I said it won't be picture perfect. So it danced around there for a while and then came down. You draw your neckline. So the support in between the two resistances. Okay, and then you sell when price goes below the support line. Your stop loss is above there. So you can see it went up, but it didn't hit the stop loss and then came back down into profit. So you can see, wow, that's a big move. Can you see? Big move down. Okay, very big move down. So one of the things you need to learn as a trader is being able to be patient. Be patient for your target to be hit. Be patient for your analysis to play out. Okay, so this stop loss would have been about, from here to here, 75.00 to 76.49, about 149 pips. You can see how I just calculated that from my head. Okay, as you keep trading, you'll be able to use your head and your eyes to calculate your pips. So 149 pips thereabout, and then from that entry, it went as low as 500 pips. Okay, 500 pips. So that's more than ×2 of your stop loss. Absolutely amazing. Okay, so thank you so much for watching the video. I hope you learned something new. Ask your questions in the comment section of this video. Let me know what you think about the video. Let me know what you think about the analysis. Okay, and if you like the video, give us a thumbs up. If you have questions, ask your questions in the comment section. All right, if this is your first time watching our video, make sure you click the subscribe button and then click the bell beside the subscribe button, then click all notifications so that you'll be notified whenever I upload a new video. Thank you so much for your time. Thank you so much for committing to watching these videos and learning how to trade forex. All right, it's for your own good, for your own benefit. This is my own retirement plan. Okay, this never leaves you until you die. Okay, so I'll see you in the next video. Cheers.